Hey, greetings. Dr. Jeffrey Scott here, and this is my weekend market update. I'm doing this earlier than I normally do it. It's Friday, um, February 13th, which in itself is a interesting date. I don't know if you can even see that thing. I'm trying to move that out of my way. I don't think it shows on your screen. I titled this one, The Market's Rally on the CPI Data. Inflation came in, I guess the core about expected, a little lighter overall. Of course, I'm sitting with my wife when that came out, and she looked at me, and by the way, we're at opposite ends of the political landscape, and she just started telling me what do you mean there's no inflation, how much everything costs? And yeah, I guess that's not the only household that's probably having discussions about inflation and how costs are up. I think that what I explained to her, and it's a weak excuse, is that once you get prices higher, it's only inflation on additional growth. And those prices don't typically come down, except as she pointed out, gasoline. Bigger question is, considering the mag sell off and everything else, does today's rally even matter? Does it change anything? Again, my name is Dr. Jeffrey Scott. I'm the Market MRI Pro at gmail.com. My Google group is called Top Down Trader, and my website's marketmripro.com. As always, this is for educational purposes only. Anything I should talk about is the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy, sell, hold any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades, and I've got tools in multiple platforms. My big ask of everybody watching this is just do me a big favor, and there's going to be links in the remarks section below. If you're in the Top Down Trader group, it'll be in the email. Just please click on the links. Those who know me know that I really am a regular person. This is not my day job. I am a physician, although now I function more as a healthcare entrepreneur with a couple of startups that I've had, cancer doctor. And I've been helping people trade for 30 years, whether it's YouTube videos, some live meetings. Almost everything I've always done has been for free. One of my users, Praveen, built an amazing product to make my life easier. We decided to take it to the marketplace, and because of that, I'm out here talking a lot more about it. Um, I have no mailing list, just what's in Top Down Trader, and I don't really think that's going to change. I use the Google group as my mailing list. And so I've gotten invited now to speak at programs. That's great, but they all expect me to bring people, which if you don't have a mailing list, it doesn't happen. So if you can do me a big favor, there is a program called Traders Forum on Saturday noon, Valentine's Day Investor Summit. I will be speaking at 12. It's a short conversation, 45 minutes. I'll be talking about current markets and why I like trend trading. Um, I think there's a theme about silver, so I'm sure I'll take a look at it. It had a great trend while it lasted. It's free. I don't believe that they send out the videos afterwards, but I will record it, and anybody that registers just needs to reach out to me or be in the Top Down Trader group, and I'll post it there. But if you can help me out, please register. And then on Friday the 20th at 5 p.m., so a week from today, I'll be doing the Metastock um, Traders Conference. I guess I close it. I think I'm the last speaker, unless maybe Jeff Gibby added on after me. Again, I'll have the link for registration. You register for the whole 5 days. I really enjoy speaking at those programs. I get a really great turnout. And again, the same story. They're like trusting me and hoping that I bring a few people with. So love to have you join and watch. Again, I'll record it and post it in the um, Top Down Trader Group, but do me a favor and register if you can. And while you're at it, can you hit the subscribe button? If you like what I do, give me a thumbs up. If you don't, well, you could give me a thumbs down, but I'd rather you email me or comment in the remarks of how I can make these better. I mean, shorter be good. I keep trying, but then I get waylaid. And what else can I ask for? Oh, hit the alarm if you want to know when you're noticed, or we'll talk about the Google group in a minute. I am going to offer the program at a discount, which is kind of traditional when you do these programs. So the regular price, as we've talked about, is $26.95. Year 2 and beyond is $4.95. For those that help me out, I'm going to drop it to $19.95. That price will be good through the 22nd when I'm going to hold the mentoring. Now, I dropped these. I'm bringing them back, at least for right now, stacking discounts. If you join Top Down Trader or you're a member, you'll get an extra $100 off. And then if you own the premium tool, so that would mean an add-on that you bought in Metastock, which I think is most people are getting theirs in the $500 or $600 range, or you've bought my TradeStation application, or you have the upgraded up to the CAT scanner on Wealth Charts, I'll give you up to $200 for each of them. So theoretically, you could get in at $12.95. Most people will be at $18.95. So email me for a link and put in your email which programs you own. Now, I'll know if you have the TradeStation app, I think, but I won't know if you have Metastock, so you need to take a picture of a chart with my indicators on it, or the explorations with the MRI, and on Wealth Charts, take a picture of the CAT scanner just so I know that you've purchased them. I will be doing a mentoring session, jump starting, so it'll be mostly just sitting in the program and going through the various layouts on February 22nd from 11 to 1. And everybody that signs up, I'll give you a copy of my mentoring session that I did in January and my favorite option strategies, and I'll give you the slides as well. And I continue to give quarterly mentoring sessions for users of any of my products. If you're looking for the Wealth Charts video, it will be out Tuesday morning. Remember, Monday is a holiday. My Google group is called Top Down Trader. Why should you join? A, it's free. B, it's the way that I reach out to you. C, you can control when you're in and when you're out. Just go to Google Groups, click all groups, find join group, put in Top Down Trader, let me know how you want to contact you. And again, when you want to quit, if you want to quit, you just remove yourself from the group. It is a spam-free environment. Pretty much all new users are put on a moderated, so I review the emails, and once there's a couple of emails that seem reasonable, I will turn you off of moderated status. I do that because I'm sure it's a bot, because I don't believe the person's that silly. Keep sending out the same video about duct cleaning or the same email. All right, is there a recession in our near future? I really believe there is. When is it going to occur? I don't know. And that's the problem with recessions. The gray bars here represent recessions. 0 is the line that says whether the yield curve inverts or not. Whenever it gets below 0, it's an inversion. When it crosses back above 0, it's when it corrects. And you notice when you get a recession following every time we move back above the 0 line. This is the 10 minus 3 months. This is the 10 minus 2 years. Same thing going back to the 70s. Is it really going to be different this time? To me, those are the worst things anybody can say, that it's different. I expect a recession. Just don't think it's here. How will we know it's here? Well, we might see that the economic activity drops off, and the latest GDP was too strong for that. This only comes out monthly. It's the Philadelphia District 3 Diffusion Index. Recessions occur after you get to a minus 20. Now, we didn't get one here, which sort of a fake, but we hadn't corrected on the yield curve either. But you could see the last one we had was plus 12.6. The next reading comes out this week. Another thing that happens during the recessions is credit becomes tight, and that's what this is measuring, and there's no evidence of that. So there's always a recession in our future. It's just not so near that it's anytime soon. That could happen in a dime. Obviously there's a lot of moving targets. Do we escalate with Iran? That might be bad for the country. Um, what happens with tariffs? Um, what if inflation starts picking up and the Fed tightens? Lots of things going on. Know your news and earnings. As I mentioned, there's no news nor trading on Monday. Some stuff on Tuesday, but really the first, to me, big, important, current thing, there's a lot of delayed data coming out, is going to be the FOMC minutes for January. Thursday's jobless claims. Here's that Philadelphia Fed number, leading economic index, and the rare Fed speaker of the week. And then on Friday, a lot. We get a GDP reading for Q4, and then we get the PCE complex, and we get some home reports and sentiment. So Friday's going to be a doozy. Earnings, still a big earnings week. Most of the big cap tech is done. Boy, and those were rough, weren't they? Um, I see a lot of energy names there, um, some gold and silver, and there's still a few tech things left. As it says in the lower right, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I said it. I've used that for 25 years, and I'll tell you, I don't think it's changed since the day I first said it. Again, Wealth Charts video will be out Tuesday before the open onto the charts. So I'm going to pause it for a second, and I'm going to turn it off and turn it on because I think Praveen just did a refresh. All right, let's go ahead. I just turned it off, turned it back on. I have version 1.3.24. I don't know if you have that version or not. I get them before you do so I can break them. Then we fix them. If there's nothing that I can break, we send it out to everybody. And I'm not sure which is the version that's out there right now. So some things like the percent change tools and things I've been using the last couple of days, a few people asked me about. That might be why. Um, let's go ahead and start looking at what the day we just had. Excuse me. Bitcoin, massive day, up 5%. Actually, still down for the week. Can you believe that? Wow. Um, volatility was up again. Russell led to the upside, up 1.32, was down 0.78 on the week. Qs were up 0.21, down 1.27. Diamonds were up 0.12, down 1.14. And spiders relatively flat, up 0.07, down 1.28 from the week. The dollar was flat today, down 0.7. So pretty much everything except for volatility was down on the week. That eroded some of our breadth. If we look at the NYSE, we look out at 1 year, and we look at new highs minus new lows, you could see that we're still pretty high, but we were 235 3 days ago. So we've come down quite a bit. And the NASDAQ, which was above 100, is now flipped to negative. So as I start to answer the second part of my title, does this change anything? I still see some problems. If we look at participation, the top bar are sectors. The blue or the green is today. The white or gray is yesterday. You could see an improvement in sectors and industry groups, whether I look at the S&P 1500, the NASDAQ, or the NYSE. If we look at advances versus decliners, 74% were up on the S&P 1500, 59% were up on the NASDAQ, and 70% on the NYSE. Much better breadth than yesterday. But still, the new high minus new lows is a little bit concerning to me. And if I look at stocks above the midline of their Bollinger Bands, S&P 1500 is doing well at 60. The NYSE is okay at 58, but only 34% of stocks in the NASDAQ are above their midline of their Bollinger Bands. Why does that matter? Because in an uptrend, stocks will typically trade up to the top of their Bollinger Bands, back to the midline, and bounce back to the top, back to the midline as they're moving from lower left to upper right. And in a downtrend, they're moving from the midline to the bottom, back to the midline, back to the bottom as the trend lower. So that tells me that the NASDAQ is weak overall. If we look at the S&P 500 sectors one-day change, hey, everything was up except for the bottom two, which were down just a teeny bit, financials and communications. And if we look leadership, utilities, real estate, healthcare, materials, a bit of a defensive feel to that. Um, where were staples? Staples were up 0.34. If we look over 5 days, though, the leadership is utilities, real estate, materials, energy, staples. So really the top three are utilities, materials, energy, the top four being staples. So it's a very defensive picture with financials down almost 5% on the week. The big banks taking the brunt. If we look at themes, well, almost every theme was up today, but the big ones above 5% were gold and silver. Cybersecurity 2.8, 2.66 on another one. Cannabis, who cares, 2.59. Cloud 2.56. Blockchain 2.56. MLPs 2.54. Oil exploration 2.25. Software 2.24. That's a big move. FinTech up. And you could go and see where the strength was. Even home construction was up. If we look at weakness in the market, not many things were weak. Video games, Southeast Asia, social media, renewable energy, and e-commerce were the weakest. China, consumer discretionary, and then biotech. So this market, there's things to like, but there's still, I think, a lot of damage, probably some real technical damage this week. And let's take a little deeper look at the market. I like to think of myself as a trend trader. And as a trend trader, I know the longer I'm in a trend, the more money I'm going to make. And I like to start with the weekly charts to give me a sense of, for my trading, what the dominant trend is in the market. So we have a trending indicator, which is the red and blue, called the bongo. We have a WMA in yellow, and then we have a buy-sell signal in red and green. You'll notice that the spider, the Russell, the diamonds on the weekly chart are still in a buy. The Qs have broken down. So 3 out of 4 is still more bullish than bearish, but I'm not going to rely my portfolio on a weekly chart. However, saying that, you would have been in this markets from May of 25 until now, even with a number of modest pullbacks, you would not have been shaken out with my trending model. If I look at the dailies, it looks very different. And this is what I use to, whoops. Yeah, those are the weeklies. Let me see where we get the dailies here. There's the dailies. The dailies is how I measure, define commitment and conviction. And the dailies show me a different story. On the dailies, the only one that's not in a sell is the diamonds. So as I talked about in my videos, really the last week, week and a half, it's been raising cash and selectively putting on some puts. Now I start by putting puts on some of my big gainers that I want to protect my profits in if I don't want to close them for whatever reason. At some point I start either buying contra ETFs, which is my preferred approach to shorting stocks, or buying puts or different put spreads are different things that I'll do. And we're at a point now where I'm a little bit more concerned about this market. A week ago, the only daily that had fallen was the Qs. Now, we'll look at the markets deeper in a few minutes, but if I just go back to the weekly, whatever our ascent was, it's definitely been slowing. So we're losing momentum and really consolidating the last several weeks on everything. The Qs breaking down, the others not yet. Let's look at the US index ETFs. Now I'm going to bounce this up here. Somebody had texted me asking if the data is included in the program. Yes, everything that I show you here is what you get when you turn on the program. If you don't get something, I'll point it out. There's one thing that's a not secondary, somebody who I learned from who is going to have an app out as well, which you can either have combined or separate. And that's John Person has already alluded to it in some of his mailings. I have some of his stuff here. That's not stock. So this is the S&P. And part of this rolling over, it's hit the 100-day moving average in purple once, twice, and it hit it again today and it reversed. So if you want to be bullish, you can be bullish and say, hey, we've pulled back, we tagged the 100, we closed above it, we've got doji, which is an indecision bar and could certainly be the beginning of a reversal pattern, and we're going higher. I have no problem with that. My only concern with that are these three lines. And let's just hit them in order. This line here shows the predictive movement of the S&P 500 over the next weeks based upon the performance of the last 5 years. But that's not long enough. The green is the last 10 years, and this one here is all time. So the last 10 years have been different than the time before, but it does suggest that we could have a few more days of weakness. That's a theme you're going to see all over, and I've been saying for a month that we peak around the 17th of February, which would be Tuesday. If we look at the Qs, this one's kind of in a trading range, pretty wide trading range, but you got the same seasonality pattern. It blew right through the 100, which stopped it here, almost here, stopped it here, and we just blew through it right here. So does this pull back to the 200? That's been my prevailing thought, especially with the negative seasonality. But if we get a substantial move in the spiders, it'll probably cross over to the others. The diamonds are sitting right at the junction of the 21-day exponential, which is the lighter color, and the 17-day simple, which really overlap quite a bit. And it's pulled back, but it's at a place that would be a very modest pullback and a place that looks like it's going to likely, could not likely, but it certainly could bounce from here, except for the fact it's got the same issue with seasonality. The Russell, it's easy to forget that the Russell set an all-time high back here on January 22nd, which isn't that long ago. In fact, a lot of people, are we at bottom? Are we at a bottom? Are we at a bottom? All of these, even the Qs, are not far off their all-time highs, and I don't think bottoms usually occur near a top. The question is this just a 3 or 4% correction, or are we going higher? And time will tell. But you could see the Russell is closed just above the 21-day EMA, almost got to the 50. So certainly the Russell, the Spider, and the diamonds are all places that a bounce would not surprise. Doesn't mean it happens, just means it wouldn't surprise. If we look at volatility, we're still creeping up this line, and we did not come back to the zero line. So we've had a number of mini spikes here. Volatility has strong seasonality, and I'm going to put that in the camp of, but I'm still a little bit worried when I see that. And the dollar has been consolidating here. Not much of a seasonality. And just remember, consolidating here, when you're below the 200-day moving average, it's telling you that it was much higher. And you could certainly see right here, it's come down from a substantially higher amount. If we look at commodities, I have to give a hand to Praveen because he basically put everything I do, as you'll see, into one relatively easy workflow solution. It's cut my time of preparation significantly. Gold, after the big rocket higher, and this is one of the new tools. New means I'm still learning how to use it too, that if I touch it up here and I sort of measure down to the bottom, it tells me it dropped 20% in 4 days. And if I look at And I don't know if that includes Saturdays and Sundays, to be honest. It might. I see gold consolidating here, and I think gold, which closed above the 17-day, looks like it wants to go higher, while silver, which got, can you say, obliterated, whoa, that's not what I want. Let me try that again. So many programs, everyone, the drawing tool's a little different. So we go to the lows. At its lows, silver was down 67% from its peaks in a week. Well, you don't heal up from that. If you don't believe me, go back to 2011 when it spiked, and it took quite a long time to get back to those highs. It's trading below the 50 and below the 17. Um, Excuse me, it's trading, yeah, the 50s here. Here's the 21-day exponential and the 17-day simple. Silver doesn't look like it's healing very quickly. Oil, I think oil is all about what happens with Iran. I think Trump wants to keep oil prices, or certainly gas prices, down. Best way to do that is to keep oil prices um, down. He's got to deal with OPEC and other countries. He could increase supply, probably with Venezuelan oil. But the big thing is the Straits of Hormuz. And if we come to peace with Iran and avoid a conflict, which I can't see us getting into a ground war, oil probably comes down again, and it's good for inflation, as we saw today. Natural gas flirted with us, and now it's stuck below the moving averages. It's not down as low as it can get. It's just not that exciting here. And then what happens when we have turmoil in the markets and fear, and then we don't have as much inflation? Well, bonds go up in value and the rates come down. So look at this. Look at where rates have fallen, down to 4.06 on the 10-year, down incrementally from the prior day, 1.12%. And then on the 30-year, similar, down from the current day, 0.66 at 4.7. So we were creeping up to this 5 level, and then we've reversed. And I think that's ultimately good for the U.S. markets. If we look at the buckets, yesterday I talked that we probably weren't high enough that we're getting an obvious signal, but we did have 10 to 15% of stocks below the Bollinger Bands. Well, we reverted to midline. When you revert to midline from being down, the markets go higher. If we look at the market breadth tool, I've been writing the last several days about the difference between the NYSE, which was at a new high, and the NASDAQ that was breaking down, and asking the question, how long can that divergence go on? Does the NASDAQ pull up and start to look like the NYSE, or is the NYSE likely to follow the NASDAQ lower? And I think that was, that was the expectation I had. So we did have a pretty significant down day on Thursday. We had a bounce day on Friday, down 1.24 on Thursday and up on Friday 0.59. So not totally reversing that move. You could see that we've maintained a pretty high number of stocks above the 17, the 50, and the 200-day moving averages. And you can see the up, down, the new high, new lows, the AD lines, and the up, down volumes are all positive. Now keep in mind that both of these are under confirmed Hindenburg-Omen story. You can see the red triangles. You've had bangos this week on the NYSE as it banged a higher high. It is right at that high jump concerning area. Came down a little bit to 83 2 days ago, commented about being 100, and maybe that was a signal that was more important than anything else. And notice that the 13-week new high, new low is more bullish than bearish. Contrast that with the NASDAQ, which is broken down here. The new highs over the moving averages have come down, and you could see a new high minus new lows negative, but today the AD line and the up-down volume were positive, also in a confirmed Hindenburg state. Now, it was 29, I think, yesterday. It's 0.33 on the 13-week new high, new low. And that's something that typically when it turns up, the market has had a short-term bottom. So it's turned up today. So that's something, again, There's bullish things and there's bearish things. I was going to run seasonality, see if we have anything. Run it on the base. The seasonality, I am losing faith in seasonality, and it's a sad thing. And it's not this program seasonality. I got things that have worked and worked and worked just aren't working anymore. And has seasonality become so common to everybody it doesn't work anymore? I don't know. And I'm thinking specifically of the Netflix from this year. In fact, let's just type in Netflix. As you could see here, I've got two ways of looking at seasonality. Oh, come on, you're supposed to let me do that. We'll try this one more time. All right. Yeah, I'm not going to try to do that. This is what it was predicted from the beginning of the year. In January, which you can't really tell here, well, we've already gone through that period of time because we're in February, but the best seasonality of the year is right here around the first quarter earnings. And you could see that it ignored seasonality this year totally. It's not the only one. Market breadth, my expanded tool, I just like to look at that 13-week new high, new low on the Spider 0.75, on the SP 1500 0.69, on the NASDAQ 0.33, and 0.57. When I'm above 90, 85, 90, or below 10, 15, I'm getting to an area where I expect a reversion to the mean. That's why I watch it. I also have RSIs and AD lines and those stocks above the various moving averages from those indexes. I like to look at the sectors. Now we can look at them as ratio charts, and I love the ratio charts because it doesn't take rocket science or much time. Material strong, energy, staples, industrials, and real estate and utilities. Kind of defensive. Technology, no. Discretionary, no. Financials, no. How many markets perform well without leadership from finance, tech, or healthcare? Not many. So let's go and look at the sectors very quickly and see if anything is telling us good things or bad. Bitcoin's not a sector, but it might as well should be because of the interest that people have in it. We can see Bitcoin had a positive session today. We know it was still down on the week. If you put Bitcoin, let's see how far back our data will go on this. On a weekly chart, it's not going to go back far enough. If you put any of the Bitcoin instruments that have been around for a long time, and you look at what Bitcoin does, this pullback percentage-wise is nothing compared to some of the pullbacks that Bitcoin has had since its inception. So this is actually a standard, or not as bad as a standard pullback in Bitcoin. So here's Bitcoin down, maybe putting in a bottom, who knows. So what do we have on here? I got a timing model, so the red and green, the bongos. The yellow is the most important moving average, which is the WMA. I've got the 50 in white, and that's a 21-day exponential there. So technology is breaking down. No. XLY discretionary had held up nicely, broken down, heading towards its 200. Communications looks like it's starting to break down as well. Industrial is one of the strongest out there. Financials, hard breakdown. Very big hard breakdown. 2% down on Thursday. Big move for XLF. This is energy holding up near its highs. Looks good. Materials, same ones that we showed you on the ratio charts. Real estate, this was done for a long time, and then not long ago it sort of had a shallow cup and maybe a little handle breaking out, but real estate looks good. Utilities, big breakout here. Look at the strength today, 2.76 on utilities. And then staples also in a nice run. Very defensive feel to this market. And healthcare, technically healthcare is in a bull now or a buy. To me, it's still stuck with the moving averages. I'm not ready to say it's ready to buy this. It might be. And then back to Bitcoin. I also like to look at the major stocks that we own or owned. Been a tough week for the mags, hasn't it? Now, I keep my mags in a longer term account. All right, is he doing that thing now that he said he was doing? All right, let me pause it for a second. Of course, the minute I said, why is it not going, it went. Um, Except it went to the other one. I want key stock timing. All right, so here I put together um, 12 charts. Let's just look at them one at a time. Amazon, no, no buy. No. Apple, which I thought might be flagging here and going higher, broke down. I don't think I'd be buying either of these right now. Google has broken down. They may give us a great buying opportunity on Monday. Maybe it's time to buy them right now, but right now they're not exactly falling knives. Maybe Amazon a little bit, but they're in downtrends, short-term downtrends. The next one is what? Meta. Meta was one that had great response to earnings and sold off almost every day since. No buy. Netflix, well, I had a green candle today because I think Paramount made a stronger bid. Netflix is in arbitrage potential takeover hell in its approach to Warner Brothers. And to me, the concern is how much are they going to pay, and what is the regulatory impact going to be, and how much does this distract them from what they do? And obviously, somebody agrees. Not only do they miss seasonality, but they've just been in a horrible downtrend. If we look at the next one, which will be Tesla, probably looks the best of the bunch. It's just, it hasn't still got the daily bongo blue, still in a buy signal. Would I buy it here? No, I want it to get above the 50, at least above the 30 WMA. But at least it had a green candle today. That's got to be worth something. Nvidia, to me, it's just treading water until earnings. And I think earnings are this week. In fact, probably on, let's see, are they next week? I thought earnings would be coming up this week. I don't see Nvidia here. It must be the following week. I'll have to check that. Actually, I don't have to check. Nvidia earnings, let's pull this up, are due 225. So 225 is the following week. So this is looking forward to the next earnings. So Nvidia, it's in a Darvis box. I want to buy it when it breaks higher, hopefully on earnings. I just wonder if the market doesn't do anything until they see Nvidia earnings. Microsoft, boy, this was probably the first big signal besides Netflix. It did this on earnings. It's still falling. That was our canary in the coal mine, and it's still dropping. No buy. Labu, long biotech. I gotta say it's off my plate right now. I'd love to get back in, but I respect that yellow line. It's below it. Pharma holding up better, and there's reasons for that. A lot of the biotech companies don't have drugs on the market. They need good pricing on the drugs that get approved so they can be worth a lot of money and bought. Um, and if we're in the midst of reducing the cost of drugs in the future, it's going to hurt biotech more than those that have drugs on the market who are the actual acquirers. Data centers had I thought might be in trouble with this candle from Thursday. Actually opened with a lower today, traded lower, and then rammed up and closed just off the highs of the day. That looks a whole lot better. Probably the best chart we've seen so far, except for some of the sectors. And then defense, um, if anything, looks to me like it's ready to run again. And I just want to see something. Let me make it smaller. So you had a cup, a handle, a big breakout. Now you're having a high base. It'd be interesting to see. And the one that we were playing, which had a nice week, was HWM. And when I talk about the double momentum signal and why I find it so useful, it's because of this kind of a stock. Close above the 50, ran up to here. Now I actually thought I top ticked it and I bought some puts at 225. So I was still in it. And then it came up and then on earnings it popped, but it was moving up before earnings. Now, reality is um, it really didn't get a closing day below the 50. So it has had a great run. Let me put ITA back so I don't forget. All right, so the last thing I look at, and I'll look at them today, although they won't look good, is contra ETFs. So let's just quickly roll through these. So some of these have splits pending. I just let Praveen know he was going to fix them. I made the assumption he was watching my video the last couple of days when I was calling him out. These are things that go higher when the underlying goes lower. SPXS goes up when the S&P 500 is going lower. S&P 500 may have hit a place of a reversal. No surprise we have a doji at SPXS. DOG goes up when the Dow goes down. Doji. Potential indecision and reversal. Same thing on the SQQ, which goes up when the Qs go up. TZA hasn't even gotten up to the 50 yet, goes up when the Russell goes down. Here, this is an emerging market short, I believe, coming down. LABD, not a buy signal yet. Be interesting to watch. We have to fix that split. I gave that to Praveen. SOXS will run up if semiconductors weaken. FAS will run up if financials are weak, and financials were weak this week. This is a 3x leverage ETF, and had you bought it on this breakout around, let's just say 42, you would have had a nice little return in a couple of days. Short gold not working. And short tech solutions, just like the Qs, you've got a doji suggesting indecision and maybe a reversal. And short the internet, this thing has really had a run as a lot of the Internet of Things and internet stocks have been pummeled. And the FANGs, this one is starting to move, obviously a reverse split here that we'll have to account for. So that is my run through the market. And my feeling right now is I'm concerned about the seasonality. I haven't forgotten the Hindenburg omens, but the markets are in a place where maybe they do go higher. But unless we get the MAGs to participate and the NASDAQ, I'm not sure how much further we can go. And oh yeah, let me remind you, the seasonality gets dumpy for the next month.